Hello friends, welcome to WiFiStudy.com, one-stop destination for all competitive exams. Friends, in this video, we are going to present you IBPS PO interview capsule. So friends, this video is important for all those students who cleared the IBPS PO mains exam and looking forward for the interview round. So friends, if you want to prepare from the application mode, you can download our WiFiStudy app. This is very beneficial app in which you will get a daily current affair GK test in both the formats, in Hindi and in English. So friends, first of all, congratulations to all those who have cleared the IBPS PO mains and are going to appear in the interview. As you all know that interview is the last step in your journey from applying for the post to the final selection. Being selected for the interview does not mean that you are safe, but it may have a big impact on your final result. So this is a very important round friends, and these marks will contribute a lot in your final result. So today friends, we are going to present you some basic questions that are being asked for a long time by the interviewers. So first of all and the foremost important question is, tell us about yourself or introduce yourself. Okay, this is the foremost important question that you have to know, and you have to know that how you have to represent this answer. And this question is not only important for your IBPS PO interview round, this is important for each and every interview. Doesn't matter it's for a government sector or it's for a private sector. You have to prepare this first question that they put in front of you. So anybody may feel that this is a very simple question, but wait, they don't really want to know about you. What they just want to know is that how well you know yourself and how well you present yourself. They want to judge your confidence level, how you well present yourself. Okay, so there are 4 things that you need to discuss if this question is put in front of you. That is, first, your name; second, your family background; third, education qualification; and fourth, achievements. So these are the 4 things that you have to cover if this question is asked by the interviewer. So don't just answer as you are reading something. Instead, take your time and answer with an eye contact with the interviewer. Okay, you just don't need to give this answer as you are reading something. Okay, instead you have to take some time and then answer by having an eye contact with the interviewer. So let's see a demo answer. Okay, there is one person named Vipin Yadav. So let's see how this question may be answered by Vipin Yadav. So let's see. Sir, I am Vipin Yadav from a small village of Kanpur, Uttar Pradesh. My father, Mr. Amit Yadav, is an ex-army personnel and currently working as a security manager at ABS Securities. My mother, Miss Reena Yadav, is a homemaker. I have 2 siblings, an elder sister and a younger brother. So this is the answer of your first 2 questions. Okay, first 2 part of your answer, that is your name and family achievement. After that, we'll cover the education qualification. So moving to the academics, I have finished my graduation from DAV College, Kanpur with 65.40%, and I have finished my schooling from GD Goenka Public School, Kanpur. Okay, so this is the third part that you need to cover. You don't have to go into the depth of your academics. Okay, that you don't need to discuss about your 10th class, 8th class. Okay, so if you are an engineering graduate, then you need to put an engineering over here, this place, and after that you need to place your branch. Now if you have any achievements, then proceed like this. I was a part of my inter-college football team. Also, I have participated in the national level science Olympiad and finished runner-up. Okay, and if you have some experience, then you have to add that experience too. That is, I have worked or presently I am working at dash company as A or N, your designation, and give a brief about your role in the examination. So if you have any work experience, then you can add at the last part of your answer, and if you don't have, then these are the 4 things that you need to cover up. Apart from it, don't have to go into the depth of all these things. Okay, they just only want to know that how much you know yourself and your confidence level, how you present yourself in the front of an interviewer. Okay, this is the basic things that they want to know. So let's proceed and see another question, that if you are an engineering graduate, then the next question will be like, why did you choose banking after engineering, or why should we hire an engineer? So this is the basic question that they will ask if a person is from an engineering background. So traditionally it is believed that bank jobs are taken by either by commerce graduates or MBA degree holders, but as most of the candidates joining bank these days are engineers. So this question is very much in trend. So your answer should be like that. Sir, bank these days pay highest packages. Also, there is a great job stability. Secondly, a bank PO of today may be a CMD of tomorrow. So there is a great scope for promotion. Also, when I choose engineering, it was booming. But nowadays, there is a very less amount of job left as a great amount of engineers are being produced every year. Unless you are graduated from a very reputed college, it is very difficult to find a job in a core sector. Okay, so this is the answer that you have to give if this question is placed in front of you. And remember, never ever try to give some fancy answers. Explain in your own language. Speak your heart. For why should we hire an engineer? Just give a reason, like as banking sector is fastest in adopting new technologies, so being an engineer, I am up to date with the latest technologies that would be beneficial for the bank. Also, being an engineer, I have a strong command over mathematics, which is quite essential for a banker. So this is the answer that you have to give if they ask you why should we hire an engineer. Okay, so this is the basic 2 or 3 questions that they will ask if you are from engineer background. And after that, we'll see some basic questions about the RBI monetary policies and its instruments and some other terms that they frequently ask in the interview round. So first of all, you need to remember that all these things are very important and you have to cover up all these things. Okay, so let's see. What do you know about the Reserve Bank of India? So your answer should be like that. RBI was founded on 1st April 1935 on the recommendation of Hilton Young Commission. Okay, Hilton Young Commission, you need to remember this. Very important. With the provision of Reserve Bank of India Act 1934. It is a central bank institution of India. It was nationalized in 1949. Its work include regulation, supervision of financial system, issue of currency, bankers bank, etc. So this is the simple answer that you need to remember and you need to give. Okay, if they ask you about the RBI. Let's see another one, that is monetary policy and its instruments. So this is another very important thing you need to remember. This we will ask. I will cover not only the theoretical part, I will cover the practical part of it also. I will give you some more knowledge so that you will easily able to understand all these things, and by that you will give your answer according to that. Okay, so what is the monetary policy? First of all, it is formulated and executed by the RBI to achieve specific objectives. Okay, to achieve specific objective. What are these specific objectives which is executed by RBI? So these objectives like price stability, second financial stability, adequate availability of credit for growth. So these are the 3 things. Okay, 3 objectives. First price stability, then financial stability, then adequate availability of credit for growth. Okay, so these are the specific objectives of the monetary policy. And central bank of the country controls supply of money, cost of money and rate of interest. Okay, and according to the RBI, let's see the theoretical monetary policy definition. That is, the monetary policy refers to the use of instruments. What are these instruments? These are the instruments. Use of instruments under the control of the central bank to regulate the availability, cost and use of the money and credit. Okay, so this is the theoretical definition that you have to remember also, and you need to understand this also, that monetary policy refers to the use of instruments. So these are the instruments which is controlled by the central bank to regulate the availability, cost and use of money and credit. Okay. Apart from it, the primary objective of the monetary policy is to maintain price stability while keeping in mind the objective of growth. And price stability is a necessary precondition to sustainable growth. So this is the thing that you also need to remember. Okay, the prime objective is price stability, as I said before, financial stability, keeping in mind the objective of growth. Okay, and some instruments are like repo rate, reverse repo rate, MSF, CRR, SLR, LF are known as the monetary policy instruments. Monetary Policy Committee. So this is the committee which make the monetary policy. So according to it, the monetary policy constituted by the central government under section 45 ZB of the amended RBI Act 1934. Okay, so this monetary policy committee constituted by the central government under section 45 ZB of the amended RBI Act 1934 determines the policy interest rate required to achieve the inflation target. Okay, And the Reserve Bank of India Act 1934 has been amended by the Finance Act 2016 to provide for a statutory and institutionalized framework for a monetary policy committee for maintaining price stability while keeping in mind the objective of growth. As per the provision of the RBI Act, out of the 6 members of the monetary policy committee, 3 members will be from the RBI and 3 are appointed by the central government. Okay, and at least it is required to meet at in a year 4 times. 4 times it is mandatory to meet in a year, and the quorum is of 4 members. Okay, and each member of the MPC has 1 vote. In the event of equality of votes, the governor has a second or the casting vote. Okay, so these are the things that you need to remember. And the Monetary Policy Committee of the RBI has the following composition, namely, first is the governor of the bank, that is Urjit Patel right now. Okay, he has a casting vote. If there is a tie between the vote, then he has a second or the casting vote. Second, deputy governor of the bank in charge of the monetary policy member ex officio. 1 member of the bank to be nominated by the central board. Shri Chetan, Professor ISI यानी कि Indian Statistical Institute, Professor Pambi Dua, Director Delhi School of Economics DSC, and Dr. Ravindra, Indian Institute of Management, Professor of Indian Institute of Management IIM Ahmedabad. So these are the 6 members right now of the Monetary Policy Committee. And let's see what is the priority sector lending. According to the priority sector norms, scheduled commercial banks have to give 40% of their loans to the identified priority sectors in accordance with the RBI regulation. Priority sector consists agriculture, housing, MSMEs, education, export credit, social infrastructure, and export credit, etc. Okay, so priority sector lending is, what is this? That the commercial banks have to, schedule commercial bank have to give 40% of their loan to the identified priority sectors. Okay, so what are these priority sectors? Like housing, MSMEs, agriculture, education, infrastructure. So these are the primary or the priority sectors. What is repo rate? Repo rate, are also known as the benchmark interest rate, is the rate at which RBI lends money to the bank for a short term. When the repo rate increases, borrowing from RBI became more expensive. Okay, so this is the rate which is given by the RBI, which is given by the loan to from RBI to the other banks. And if this repo rate increases, borrowing from RBI became more expensive. And what is this? What is the current repo rate? You need to remember this also. This is very important. Okay, you need to remember all the current rates. 6.25 is the current repo rate. Okay. What is reverse repo rate? Reverse repo rate is a short-term borrowing act at which the RBI borrow money from banks. The Reserve Bank uses this tool when it feels there is too much money floating in the banking system. Okay, if there is too much money which is floating in the banking system, then this money is taken back by the RBI. Okay, and the rate of this is quite less as compared to the repo rate. And right now the rate is 5.75%. This is the rate at which RBI take money back from the bank. Okay, if they think that there is too much money floating in the banking system. What is statutory liquidity ratio? SLR. The bank and other financial institutions in India have to keep a fraction of their total net time and demand liabilities in the form of liquid assets such as G securities, precious metals, approved securities, etc. The ratio of these liquid assets to the net demand and the time liabilities is known as the statutory liquidity ratio, that is SLR. Okay, they have to keep some amount in the form of liquid assets, and right now the current rate is 20.5. 20.5 is the current SLR rate. What is cash reserve ratio? CRR. Cash reserve ratio is a specified minimum fraction of the total deposit of a customer which commercial bank have to hold as reserve either in the cash or as deposits with the central bank. So this is the amount that should be hold as reserve in the form of a cash with bank itself or with a central bank. So CRR is a crucial monetary policy tool, and it is used for controlling money supply in an economy. And right now the rate of present rate of the CRR is 4%. What is marginal standing facility rate? MSF. A facility under which scheduled commercial bank can borrow additional amount of overnight money from the Reserve Bank. If a bank want additional money, then they can take this money. Okay. By which rate? Marginal standing facility rate. Okay, and right now the current rate is 6.75%. MSFR, margin standing facility rate. What is Liquidity Adjustment Facility, LAF? Liquidity Adjustment Facility is a monetary policy tool which allow bank to borrow money through repurchase agreements. So it is used to aid banks in adjusting the day-to-day mismatches in the liquidity. Okay, so if there is a problem in the liquidity assets, then they can take some money or some liquid facility from by this, that is liquidity adjustment facility. Okay, it is used to aid banks in adjusting the day-to-day mismatches in the liquidity. Let's see another question, that is, what is a check? It is an order to a bank to pay a stated sum from a drawer's account written on a specially printed form. This is a very simple definition that you need to remember. Now let's see what are the different types of check. First, a bearer check. Bearer check are the checks which are to be withdrawn to the check's owner. These types of check are normally used for the cash transaction. So these are the check. Okay, if you want to convert this amount in a cash transaction, that you can do it by the bearer check. Okay, in which there is a bearer word which is used over this place. So bearer checks are the checks which are to be withdrawn to the check's owner. These types of checks are normally used for the cash transactions. Okay, normally used for the cash transactions. You need to remember this. That is another one. Order check. Order check is a check which is withdrawn for the payee, the person for whom check is withdrawn. Before withdrawn to that payee, bank cross check the identity of the payee. Okay, so the difference between the bearer check and the order check is, this is a risky check. Another name of the bearer check is risky check. If you lost this check and another person can take this check and can go to the bank, and that person can take this money out of the bank. Okay, they will not ask you about the identity, or they will not ask you about the ID cards. Okay, so like if there is a small amount of 10,000 rupees and this check is lost by a person, then, and the name over this check is Ankit, that doesn't matter, Ankit will go to the bank or Sumit will go to the bank. Another person can go to the bank and can take this check as a cash transaction. Okay, but in the order check, the name which is written on the check, that person is only allowed to have the transaction or to have the cash transaction. Okay, that person can refer to another person also, but have to return the another name on the previous side of the check, that is transferred to the another person. Okay, this should be written if that person don't want to go to the bank and that person transferred to that check to the another one. Okay, so this is the difference between the bearer check and the order check. Bearer check are the risky check. Okay, if this check is lost, then the another one can go to the bank and can withdraw the money. But in the order check, only that person whose name is written on the check is have a permission to go to the bank and can withdraw the money. Okay, and they will ask you about the identity or the ID card of yours also if there is a order check. Okay, in order check, the order is written over this place, as a bearer is written on this place on the bearer check. Now let's see the cross check. On that type of check, two parallel lines made on the upper part of the check, then that check is known as the cross check. Okay, if two lines are drawn on the upper part of the check, okay, two parallel lines are made on the upper part of the check, then that check is known as a cross check. The difference between the normal check and the cross check is that this type of check payment does not form the cash, while the payment of that type of check transfer to the payee account and the normal person account who's recommended by the holder on the check. Okay, so these type of check payment does not form in the cash. Okay, so this is the only difference between the bearer check and the cross check. These check can only be transferred, the money only be transferred to the payee account. The money cannot be withdrawn in a cash. And what is the difference between the cross check and the account pay check? They are the same check, but the only difference is the account pay is written between the two parallel lines, then that check is known as the account pay check. And if a company is written between the two parallel check, then that check is known as the company cross check. So this is the only difference between the cross check, account pay check and company cross check. Okay, now let's see the stale check. If any check issued by a holder does not get withdrawn from a bank till 3 months, then that type of check are known as the stale check. So if any check issued by a holder does not get withdrawn from a bank till next 3 months, the validity of the check is 3 months. So if a person does not withdraw money from the bank till next 3 months, then that type of check is known as the stale check. Now let's see the post-dated check. If any check issued by a holder to a payee for the upcoming withdrawn date, then that type of check are known as the post-dated check. Okay, so if if a date after the 2 month from the present date is written on the check, then that check is known as the post dated check. Okay, now let's see the traveler check. It is an instrument issued by a bank for remittance of money from one place to another place. Okay, so traveler checks are the check which is issued by the bank for remittance of money from one place to another place. There is no expiry date of these type of check. First of all, you need to remember there is no expiry date for these type of checks. Okay, traveler checks, and it can be used anywhere across the world and can be used in different denominations. And if you cannot use this check single time, then you can use this check into the next time of your travel also. Okay, so it is an instrument issued by the bank for remittance of money from one place to another place. So there are few other checks also that we need to discuss. That is mutilated check. Another one is the mutilated check. Mutilated check. These are the check if a check is torn into two or more parts. Okay, it is torn into the two or more parts, then that check is known as the mutilated check. And there are another check that is gift check. A bank charges a small amount of money, okay, over the gift check, and this check is given on the birthday as a gift, or a wedding gift as honor gift. Okay, so these check are known as the gift check. Or there is another one that is banker's check also. There is another one that is banker's check. It is issued by the bank on behalf of a customer to a specified person within a city. The validity of the banker check is 3 months, and it can be revalidated after legal formalities. Okay, banker check. You need to remember that it can be revalidated after 3 months also. Okay, after some legal formalities. So this is the thing that you need to remember. Okay, now let's see what is Treasury bill. So T-bills are issued by the RBI backed by the government securities. RBI issue Treasury bills on the behalf of a central government to meet the short-term liquidity needs of the central government. Okay, so to meet the short-term requirement of the central government, RBI issues T-bills, that is Treasury bills, which is backed by the government securities. Currently, the government of India issued 3 types of Treasury bills through transitions for 91 days, 182 days and 364 days, and they are available for a minimum amount of 25,000 and in multiple of 25,000. What is commercial paper? Commercial paper are issued by the private organization or financial institutions having strong credit rating to meet short-term liquidity requirement. So commercial paper can be issued for the maturities between a minimum of 7 days and maximum 1 year. Okay, and can be issued not less than 5 lakhs and multiple thereafter. Okay, so these are issued by the private organization or financial institution. If a company has a very good credit rating, then this can be issued by them, and this is used for the short-term liquidity requirement. What is certificate of deposit? CD. Certificate of deposit is a money market instrument. It is issued by the scheduled commercial bank. Okay, you need to remember this. And selected All India financial institutions that have permitted by RBI to raise short-term resources. Okay, if they want to raise short-term resources, they can use this CD, that is certificate of deposit. Minimum amount of certificate of deposit should be 1 lakh. That is minimum deposit that should be accepted from a single subscriber should not be less than 1 lakh and a multiple of 1 lakh. The maturity period of the CD issued by the bank should not be less than 7 days and not more than 1 year from the date of issue. What is Mudra Bank? Mudra means Micro Unit Development and Refinance Agency. Okay, this is a full form of Mudra, Micro Unit Development and Refinance Agency. This is the full form of Mudra Bank. Is being set up through a statutory enactment and will be responsible for developing and refinancing through Pradhan Mantri Mudra Yojana. And it is first set up as a subsidiary of the SIDBI, that is Small Industrial Development Bank of India. It will be later be converted into the full-fledged bank through an act of Parliament. And it is a public sector financial institution in India. It provides loan at low rates to the small entrepreneurs. Okay, so there are 3 stages. First the Shishu, then there is a Kishore, then there is a Tarun. The bank was set up with an initial of 220,000 crore and a credit guarantee corpus of rupees 3,000 crore. The bank have categorized the amount of loan to the given 3 different categories. That is for the Shishu, it is the first stage, and in it the loan will be given for up to rupees 50,000. In Kishore stage, you will get a loan between 50,000 to the 5 lakh, and in Tarun, The amount to be provided is 10 lakh rupees. What is NEFT? It is a nationwide fund transfer system which facilitates fund transfer from any bank branch to any other bank branch. Okay. The difference between the NEFT and the RTGS is that NEFT settlement happens in batches and on net settlement basis. Okay, this is the foremost important thing that you need to remember about the NEFT and the RTGS. The difference between both the things. NEFT settlement happen in batches and on net settlement basis, whereas RTGS is real time and gross settlement. Okay, the net settlement means the transaction pertaining to the particular bank branches are kept on hold and accumulated and then proceed together in a batch with the net amount which would either be incoming or outgoing transfer. Okay, this is this only because of that NEFT transaction will take some time as compared to the RTGS, because they are first collected or accumulated and then proceed together in a batch. Okay, there is no limit of minimum or maximum transaction value. NEFT cannot be used for foreign remittances. First, this is the only thing. This is the another thing that you need to remember. What is RTGS? It is a centralized payment system through which interbank payment transaction instructions are proceed and settled on gross basis in real time. It means that the transactions are settled as they happen. So this is the fastest medium by which a money can be transferred in our nation. Minimum amount is rupees 2 lakh and there is no limit to the maximum amount. A service charge is charged by the bank for outgoing transactions and nil for inward transactions. It is used by the bank to settle their interbank account transaction as well as customers' high value transactions, and it uses Infinet platform to operate. Infinet, that is Indian Financial Network, to operate. And what is Banking Ombudsman? The Banking Ombudsman scheme was introduced under the Section 35A of the Banking Regulation Act 1949 by the RBI with a direct effect from the 1995. The Banking Ombudsman scheme was first introduced in India in 1995 and it was revised in the 2002. So what is the meaning of Ombudsman? So these are the persons who are also known as the investigation officer. Okay, investigation officer who investigates the corruption and all these things are known as the ombudsman. So currently Banking Ombudsman scheme was introduced in 2006. So this is another thing that you need to remember. Banking Ombudsman is appointed by the RBI. What is small finance bank? They cater to deposit and loan, particularly in a small area. Okay, if there is a small area, then small finance bank can deposit and provide a loan. They are meant for the financial inclusion of small farmers, MSMEs and unorganized sector. And MFI and NBFC, that is microfinance institution and non-banking financial companies, can convert themselves to the differentiated small banks if a license is allotted to them. 25% rural branching and 50% loan to the MSMEs. Priority sector lending of 40% applies that they need to comply within 3 years of their licensing. Cooperative banks cannot apply for the license of small banks. Okay, another thing, NRI can apply for license. Cluster preference for licensing would be for the Northeast. For the Northeast India, cluster preference, it means group preference. They cannot set up subsidies. They can appoint business correspondent agent but cannot become business correspondent agents of other banks. Okay, so they have a power to appoint business correspondent agents. What is payment bank? Only current and saving account ratio, net banking and credit deposit or prepaid cards are allowed. FD loans is not allowed, so the source of their earning would be the invest in the government securities where they will get an annual interest of around 8%. Maximum balance is 1 lakh per customer is allowed in the payment bank. What are non-performing assets? The assets of the bank which don't perform, that is don't bring any return, are known as the non-performing assets or bad loans. So bank assets are the loans and advances given to the customers. If customers doesn't pay either interest or part of principal or both, the loan turns into the bad loans. According to the RBI, term loans on which interest or installment of principal remain overdue for a period of more than 90 days from the end of a particular quarter is known as a non-performing assets. Okay, so the limit is 90 days. If a person doesn't pay an amount, that is installment or a full principal amount for a period of more than 90 days, okay, from the end of a particular quarter, then that thing is known as the NPA, that is non-performing assets. Okay, so these are the last minute tips for the interview, friends. You need to remember and you need to work over these things also. First of all, greet your interviewer with a smile, give eye contact, greet the lady member first if there is any. Second, answer questions properly. Even if you need a few moments, silence to collect your thoughts. Okay. During the interview, do not fold your arms, lay back or look to the floor. Sit upright, try to maintain good eye contact, use your hands and lean forward while making a point or listening something. Fourth, stay updated about the latest news. Read the newspaper thoroughly on the day of the interview. Okay, they will ask you about the current affairs also. Be updated about the top executives, headquarters, etc. of the bank, which you have chosen for the priority sector. First priority. Answer clearly. If you don't know the answer, simply say, sorry sir, I don't know. Okay, this is the another important thing. If you don't know the answer, simply say, sorry sir, I don't know. Don't give a wrong answer. Okay, don't give a wrong answer, and that will make a negative impression on the interviewer. Okay, so these are the last minute tips for the interview, and hope you like it this video and you will subscribe us. And this, friends, best of luck for your interview round.